everybody, and welcome to the 26th edition of LM's Weekly Wrap, our weekly program to cover all the developments in the market. Joining me is Jash. He will be briefing us about the international developments, the global developments, as well as the domestic developments. It's been a kind of a roller coaster week for the markets, influenced by the global developments as well as the ongoing earnings season. So, for more light on the global developments as well as the domestic scenario, welcome Jash.
Thank you, sir.
Kindly brief us ahead.
Thank you. It's great to be back. As usual, I'll be starting with the Nifty levels, and if we see Nifty is going round and round around 18,000 levels, 200 points up and down. I think what we see in the market is confusion. On one side, some results are good. On the other side, the global developments are some places are good, some places are bad. So we need to see on how the markets go. Majorly, I'll be first talking about the US markets. The first positive sign over there is that inflation is getting under control. So that would mean that Fed has some breathing space and they'll not be taking any aggressive rate hikes. So that is a very good news where the FI money might start coming back. But also, as I mentioned in the last video, a lot of FI money has shifted from India to China. The China is on a multi-year low in terms of valuation. Also, the reopening of China has been proved. I think it has been proved very good, and that is why we can see a rally in the metal space.
Yes,
The Chinese economy is set to improve day by day and in the coming months, and it is to watch out. That would mean that the supply chain constraints that have been going on, that will all settle, and the supply chain global will start becoming normal. Coming back to the domestic markets, I would say that the growth rate in the coming year in the 24 and 25 is anticipated to be good. The margins will return to normal, and of course we'll see a good growth after a dull period of the last 1 to 2 quarters, and even in the coming 1 to 2 quarters the market should remain dull. But the spaces that we need to watch out for is IT, metals, auto, banking. These definitely Nirav sir will throw some more light on that. But this is what we should watch out for, and I would hand it over to Nirav sir. Thank you.
Yeah, thank you, Jash. So, as pointed out, some sectors look very interesting, and as we go into the earnings season, as the earnings season picks up pace, I think this is a time to just wrap up all the results which have been announced, just to get an idea about how the sectors have been behaving. As pointed out, two sectors which have given good support to the market are IT and metals at the moment. And we have IT which went up on account of some very interesting developments. One is the frontline IT stocks. We saw better than expected performance from Infosys, TCS, HCL Technologies, and the first set of the results which were announced in the IT pack proved to be kind of a savior for the markets. Apart from this, we had good results also coming in from persistent systems. So this given support to the markets. We are seeing divergent performance in the IT stocks, where the top rung IT stocks continue to do very well. They've recovered from the 52-week lows, and they've really made a comeback. And at the same time, we see a lot of mid-cap IT stocks which are languishing, and they are down approximately 40% from the 52-week highs. So this is one interesting picture which we have to observe. But overall, IT giving good support to the markets. The second is metals. We have metals have taken positive cues from China reopening. We've seen some very interesting movement developments as far as this week. Metals and mining, Coal India Limited, one of the biggest gainers. Vedanta Limited was one of the big gainers in the market. Tata Steel. And today we await the results of JSW Steel. So it will be interesting to see the numbers. The stock closing weaker ahead of the quarterly results.
I think the steel last quarter was not that good. That's why maybe it's weaker. But the commentary is very important, as you always say.
Yes, and it is expected that the prices are likely to inch up
That's
in the
right.
months
Yeah,
ahead. So it remains to be seen. Though my personal take is that if there is an excessive rise in the prices, there is likely to be a rollback because
Correct,
the
yeah.
demand is likely to get impacted.
That's
So
right,
that's the update over there. On the banking side, we have had a couple of numbers which were declared big numbers. We had HDFC Bank, which was a consistent set of numbers. Though initially there was no reaction to the numbers, but the stock has started inching up in trade. It was one of the big gainers in the week last. And we had markets giving a muted kind of a reaction to IndusInd Bank numbers yesterday, despite being an all-round beat. We have three important results tomorrow, amongst which we have a couple of banking results. We have Kotak Mahindra Bank is likely to declare its numbers tomorrow. We will be having ICICI Bank results. We'll be having the IDFC First Bank results. So these are going to be important results to watch out for, apart from, of course, Yes Bank. So a lot of cues will come as far as the banking is concerned, but the overall take in banking is that FII selling is weighing on the banking sector. Banking sector is definitely under pressure on account of the FII selling pressure. So that is something which we need to watch out for. The next sector is capital goods and infrastructure space. I think the infra proxy, which is Larsen & Toubro, has been one of the biggest gainers of this week too, in the run up to the budget. So we just have about 7 sessions ahead of the union budget, and infrastructure looks to be a very, very interesting story. We have capital goods, which is becoming another interesting story. We had Siemens, which has just signed a 26,000 crore contract with the government of India to deliver 1,200 electric locomotives. So such scale of operations definitely augurs well for the capital goods space, and I think better times are anticipated as far as these sectors are concerned, namely infrastructure and capital goods. In the FMCG space, we had numbers declared by HUL yesterday, and I think while the numbers were fairly decent enough, but the markets, as was indicated by us, the markets were likely to give a thumbs down to the new royalty arrangement with Unilever PLC. So I think that's weighed on the stock today. I think the stock was under tremendous pressure throughout the market session. Apart from this, we had Asian Paints. Asian Paints also was under pressure on account of the flat volume growths which we saw in the decorative segment. So revenues and margins were under a bit of pressure. Overall trend which has been observed in this quarter results, is that the inflation seems to be moderating, and with inflation moderating, margins have begun to improve. That's one positive thing. And the second important factor is that the rural demand is also beginning to see some recovery. So hopefully we should see better times ahead. Q4 should be a quarter where we should see better quality of margins and better quality numbers. Today we have the results of JSW Steel and Reliance Industries later, and I think they will give us a direction about how the petchem industry, oil and gas industry, retail, etc. are performing, and at the same time we'll get an idea about how steel margins are performing. Rest, I think nothing has come in the pharma space. Still no results are out over there. Cement space also, we don't have any major results, and some of weekender stock ideas continue to perform exceptionally well. We have Action Construction Equipment, which has performed quite well in trade. We have transformers and rectifiers, which has done quite well. Our IPO call on Sula Vineyard has performed quite well in trade after Quantum Mutual Fund has bought about 1 million shares from the market. So I think lots of other things to discuss, but time constraints of course do not permit us. So I think do write to us with your feedback on our program. We'll keep you posted on the market developments, and I hand over to Jash for the concluding remarks.
Thank you, sir. Thank you everyone for watching the video, and I would like you to like, share, and subscribe the video. Please press the notification bell so you don't miss any videos, and download our app InvestMart to get all our research calls. Thank you.
Thank you very much.